Is anyone going inside saying they're really smart? And smart
Pretty good, man. Pretty good. Been having quite a bit on YouTube. I'm averaging about like 120 to like 200 views when I stream on Tradecast. I'm doing like about 95. So pretty good. Pretty good. Definitely. I gotta do some more stuff to, like try to get more like street, more viewers and stuff like that. But it's going good. I can't complain.
it's almost as if the season's over for these. Now, I
Mhm.
happen to think it's not. I want to see the
Let's
season over. Well,
see.
it's like, okay, we decided Disney's going to buy Hulu. All right, Comcast didn't have a good quarter. We work for Comcast. Paramount is a disaster.
What is it?
Zaslav can't pull off Warner Brothers. By the way, I really disagree with that because of the way his debt schedule is. I'm not as concerned as others. So, I mean, you got Disney, you had ABC, NBC, CBS, and ESPN, all spoken for, and Fox, nobody cares about it anymore. So I just think that the most important thing is to tell the story. And if Iger has Johns, he can actually do other things. I wish you were. I mean, he's a great CFO.
I spoken to him a couple of times. Like he's dabbled, but not really for the most part. Yeah, like I've reached out to him a few times to see what's up. But yeah, I don't know, like I think he's still taking a break and stuff like that. Or I think one time he might have said like, yeah, he's like dabbling or whatever, back and forth or whatever. But yeah, not consistent.
I do
There.
love my wife, my kids, wish them unbelievable, very good luck. But I'll tell you that what really
Got
bothers
himself
me is when I come in
some
and
real
there are
estate
people who tell me something and then it doesn't
stuff.
happen. Now, I'll give you the opposite. Clorox. Linda Rendell was adamant that the hack was bad. The hack was real bad. She
Good
comes right
morning,
back
good
and
morning,
explains
everyone.
why she can
Good morning.
give it, and she's got some game. Versus say Tesla, where all you do is mention that the Cybertruck's probably going to undersell versus Ford 150, and a very thin-skinned CEO apparently takes to Twitter. I don't know. I had some people say, "Aren't you going to fight back?" I said, "I haven't read my Twitter comments since about 3 years ago." Jim mentioned I have to get up in the morning, put my clothes on, typically Brioni. But today I see the one that's hard to pronounce. I see
Jim mentions Clorox. UBS does go to neutral today.
it's good as sell. It's better to sell. By the way, Hidden Valley Ranch is doing quite well. And you can use that in a variety. That's just not just sell. You can do a lot of things with it. As someone who is in the kitchen.
You mentioned earnings. Today, B of A says, actually, the title of the report is Don't Worry, Earnings Were Fine. Savita says that corporates already had their earnings recession, Jim, and they made their moves, and now they're in a margin expansion mode as long as demand holds up.
I think that's very right, but you have to look at the industrials. That's who really did well. The Ingersoll Rand, Parker Hannifin, Eaton was probably the best quarter. Eaton was amazing, and that's because they're doing a lot of stuff with climate and doing a lot of stuff with making so the grid's better. Straightforward story, Eaton. This is a renaissance of clean and a renaissance.
Good morning, everyone. So as I stated last night, I'm still watching for a higher low. I think this might be it. Higher low, a double top for a short. I'm gonna be targeting 4306 and 4290 on the initial short. Overall, I do believe that if not this week, maybe next week, we can see ES back at 4135 to fill this gap. So just gonna need some confirmation. So I'm gonna be trading relatively light until I get a breakdown of structure, maybe a nice break and close below 4340, 4350 would be ideal. So happy Monday. Let's see what type of opportunities we get today. But yes, I am looking for shorts.
Well, if he's bringing in Apple, everybody's going to have to bring in Apple. And Vision Pro may not be the colossal joke that people think it's in. Sub Rosa, everyone's saying Cook's lost it. Cook has lost it now since 2011 when he took over. Man, if he's lost it, count me in.
Yeah, I mean, it's not as close to its all-time high as Microsoft.
Well, Microsoft, remember, Amy Hood had been dropping just expected until last time. She's the CFO. That would be another CFO I would steal, but she's never leaving. This is Goldman Sachs. But man, what a quarter. And if you go back over her comments, she had nothing negative to say. She's been a bit of an albatross because she's so honest. Now she had nothing bad to say. I think that matters. That's why Microsoft's probably the best of the Magnificent Seven. That's your winner, okay? And I gotta tell you, we haven't figured out yet who Steve McQueen is. It's up in the air, but in November, late November, we do have a video reporting. I sent Steve McQueen going down the street in San Francisco. You know,
Let's take a look. Where's CL at? Okay. Can I get my pullback? So I'm going to be looking to take a long on ZL if it can come back down to 49 even. Natural gas, massive gap down yesterday and still dropping. I'll be looking to take a long on this for potential gap fill.
6-week highs on the Dow, 3-week highs on S&P NASDAQ. More squawk on the street in a minute.
I hope today's not a boring ass morning like last week. Ooh. Get it.
Crude oil moving higher this morning. Saudi Arabia and Russia say they will maintain their supply cuts through the end of the year. Meantime, WTI and Brent coming off their worst weekly performance in nearly a month.
So tired.
6%, Jim.
These morning sessions, man, they catch up sometimes.
and how about the fact that Russia's completely evaded all the sanctions with this their tanker fleet? I'd love to know where it goes, but I just think remember we do have this kind of axis of
Yep,
opposition
NQ.
because
Nasdaq as well has a gap to fill as well. So the gap to fill on Nasdaq is at 14,265. So literally where we're at, we're looking at almost 1,000 point to the downside on Nasdaq. And ideally, what I would like to see again, it looks like we're forming a lower high. So we just need to see how the 930 plays out. Will it hold? If 930 plays out, we hold. Then let's say we get a solid close below, let's say 15,130, and we can really break below 15,015, we could then possibly see a nice little drop down to 14,890, and then maybe a little bounce to 1530 to create another lower high, and then just continuing downside. So just how we saw in the run up where price ran up, slight pullback to create support, creates a new high, pulls back to create a higher low, runs up again, pulls back, creates another higher low. We're going to be looking for the same thing to the downside, because this gap right here will be filled. Again, if it's not this week, maybe next week. So all week long, unless we have some like major news that comes out and it's like, oh, the market's going to continue running, I'm going to be looking for shorts all week long until this gap is filled. All right, so I am not interested on buying this because 4-hour super overbought, daily's getting there, right? So I am short biased.
As we count down to the opening bell.
There's kind of a shift in what we care about on Wall Street. We're looking for companies that are disruptive, that really don't have any analogs, at least that are public. And the one I come back to is DraftKings. There's just repeated emphasis that this was a truly great breakout quarter. I felt not enough paid to the idea that they've now passed FanDuel in market share. They have a November 14th event. They have a November 17th Barnstorm event. Jason Robbins has become much more facile in explaining the story. There's still very big states where you can't gamble in. The season itself has spurred tremendous growth. Daily fantasy, which is something that they really emphasize, has just taken off. And as many fantasy leagues have been decimated by injuries. So I think this is the one. I mean, it's up big. It's one of the few SPACs that have worked. But this is a technology wonder. It is a great app. Winner take all, as I told him. Loser take none. He disagrees with me. He says, you're too bullish. I said, no, I'm right.
Where do consumer worries fit in here? If in fact consumer
What do I think about South Korea banning short selling? That lets me know that a turn is coming, which I've been saying this for however long, that a massive drop in the markets is coming. And by them banning or restricting people from short selling is basically to cap the downside and essentially what people could make. It's no different than, you know, when firms here in the US, they triple or quadruple the margin requirement to trade certain asset classes, right? And they do that to limit people's ability to make money, but then also to limit their potential losses.
If the Chiefs win, you get $25. That's all.
Do you think Penn ends up taking share?
I think no.
Really?
I think that I think it's still more. I know that's not consensus, but Jason has the best app. This is a technology game.
Pretty fascinating coming off of the print last week.
It's true. I gotta hand it, Jason. You know, they have run the cleanest shop. And they've run the best app. And the thing is,
Limit their losses. Sounds like. Yep, it is. And then also, you know, as I've stated before, like in the Zooms with Deck and them, I'm like I've been thinking that or projecting that we if we do have a rate cut, it would be sometime, you know, mid 2024, which would be, you know, between March and June, right? The second quarter. So when that happens, you know, the market's gonna end up dropping somewhere between 18 to 20%, maybe more. And if you're unable to, you know, bet against stocks, well, it limits the downside of what the market will experience by restricting people from short selling. Three minutes to go. Not quite understanding this question. What do you mean you full cash when investing? Oh yeah. Like, do you have any long-term position or the only long-term position that I have and I've been accumulating is Intel. Intel is let me show y'all. Okay. Intel is the only company, Intel and Neo. Neo because I know with the years to come, they're continuously pushing the whole EV route, and Neo being the competitor to Tesla and in that same space. When Tesla goes back to $500,000 a share, Neo is gonna go to like 70, 100, maybe $200 a share. And then Intel, the reason I've been so bullish on Intel is one because of the impending war between China and Taiwan, where China wants to bring Taiwan back into the fold, and majority of the chips that goes in phones, computers, military devices, cars, and all these electrical vehicles that they want to build and push onto people, all of those things require a great deal of computer chips. So Intel is poised to really blow the top off once China fully goes after Taiwan. So that is why, regardless of whether we have a 2 or 5, or hell, I mean, we could have a 18% drop by the end of the year, and I would still be picking up Intel, because I know that once China goes after Taiwan and captures Taiwan, it's gonna limit the amount of chips that are going to be available for Western countries. And any company that's, you know, that relies on chips, Intel is it. And I believe Intel and Ohio, they won that whole chip initiative when with Biden's administration. So Columbus, Ohio, I believe, won it. So yeah, so those are my only two long-term plays, Neo and Intel, regardless of what the market does.
The FTC's
Oh, nice little pop. Oh, market open.
which is like, but they've really kind of wrecked the
Okay,
M&A
okay.
market. I mean, when you look at Amgen, how long it took to be able to buy Horizon. By the way, that was a very good deal. People don't seem to think so. It's still early. I do think that the chilling
Yes,
effect is just
popping.
astounding. The
Yes,
fact that you have to go to
popping.
court to do a deal.
Let's see, are we gonna create a
has made it
lower
so
high?
for most, I deal with a lot of M&A
Whoa.
lawyers. They say the same thing, which is she'll go for it.
Let's see. Ooh.
Time you see something bad for workers, good for capital, the president will be watching. That's what he
Another push.
It's Lithium Argentina celebrating recent spin-off and the Nasdaq and ETF provider Defiance. I keep hearing you, Jim, talk about the cap that the FTC has put on the market in terms of M&A. Yes. Your fear of
I'm gonna try a short here at 43.89.
higher wages. Without those things, would you be markedly
Yes.
more excited?
Oh my, if we could have M&A, there would be so many deals. Let's think about the fact that JP Morgan was able to buy First Republic for the downturn and was able to pass the fabled 10%. A number of mergers we'd see in banks because of the way technology works would be extraordinary. The number of mergers we see in fintech would be incredible. We still think about the Albertson, the Kroger deal with Albertson. That's not, it's nowhere.
Give me that
I think Kroger, I think they're never going to let that go on. They let Rite Aid go under. Didn't seem to matter. There would be tremendous mergers among and people who sell cars. There would be big mergers in retail. But no one wants to do these things because they know that they would just be rejected. Then you have to go to court. And by the time it's over, you lose a lot of talent. I commend Microsoft for going through the deal, but they're the richest company, second richest company in the world.
What about Exxon, Pioneer, and Chevron
I
has?
think those might be blocked.
Really?
Yeah, people don't think so, but I just think that they're studying. Look, remember, if you go back and read her stuff, it's very dogmatic. Just as mergers are bad, so mergers should be blocked. That's the ethos, and I think people just haven't read her. It's painful as a bull to read her.
I'm gonna
What she's
cancel the
saying
order
is,
here, and I'm gonna take
shareholders
it
have made Horizon.
on
It's time
the
for the
Forex
Forex.
side.
That's Biden. I mean,
Alright,
Biden won the
Phil,
picket line, which is sad
market.
at the moment, because I could argue that he destroyed the profitability of the companies that really matter in terms of becoming EV. I don't think Mary Barr would disagree with that. I don't think Farley would disagree with that. You have to get him off the desk to be able to say that. But he decided to side with the workers, which therefore meant that the loser was even.
Well, GM is going to invest $13 billion in U.S. facilities by
Okay.
April the 28th.
I'm gonna scale in one position on Dow Jones. So far,
Unassisted.
this 30-minute candle's looking pretty good as a rejection.
The cruises.
Okay, so I'm not getting yes.
Because they've spent a lot of money on that Ford Hazard. And when I was in the back.
All right, so this is a really good sign. All right, so lower high. Last week's high is 43.9175. So anything that holds below that is ideally going to be a short. I'm only going to be risking about 5 points from my entry. So my entry here on the Forex side is our market 43.69. So understand that yes, the pricing, the numerical value is different, but that's just because it's a different platform. Forex, remember guys, Forex has no contract rollover. It's continuous, whereas with the actual futures we have contract rollovers and so forth. So let us see.
Are you worried about threats of organization there?
No, because Musk is smart.
I'm just gonna stop down. Yeah,
I mean, Musk fame would be a lot of fun.
they're gonna play around a little bit before actually, giving us the move that we want.
I think that the UAW was underestimated the whole way.
Really nice move to run the highs, and then
Very smart. They were completely
let's see if we can get this
they were
drop.
outgained at every turn. I mean, it was almost like
Hmm?
they were that Fane was a great NFL coach who really figured out all the weaknesses of the other team and just came in and blew them away. They were blitzing. They were doing everything right. I mean, they had like linebacker and corner
Okay,
blitzes
looking
and
good,
safety
looking
blitzes.
good.
And, you know,
Yeah.
the other guys like I love Farley. I love Farr.
Oh, lovely.
And I think that they were
Very
what
lovely.
happened? They were in the What Happened camp, and when the game was over, it was just
Yes.
Where the
Holla
offensive
at your
coordinator's doing a lot of
boys.
this.
yeah. That game was played in Frankfurt. They were like they were flat. No, I just feel like what happened is that they didn't see Fane coming because Fane didn't have a big majority. Fane had a plan. They didn't. And it's very painful because these are the companies that you need to see have more money. Every time they say,
If only I could have gotten filled at that. 43.89. Ugh.
It does look like they are going to take some time to consider what the studios are calling their last, best, and final. It'd be good to put that to bed, would it not?
Yeah, that would be. Boy, we need. I hope that. Look, if you're labor, you're looking at this. You're saying, "Wow, we're done taking what they've been giving us." But the one thing, remember, unions represent about 20% of the workforce. They've been decimated, and I mean, I look at Boeing. They could have it. That could be the next one where you would see some problems because they think they should probably make more money. But I worry about unions. I worry about the president who was self-proclaimed not pro-stock market when I met him a number of times. No, he's not anti. He just doesn't put in the equation. I think that there's
Okay, that was looking good. Keep it going, baby. Keep it going.
that
Up almost 10 points on my Dow Jones short.
our show is dedicated to rich people, and people aren't. There's nobody who's striving through the stock market. I think that they're dead wrong. But you know what? It doesn't matter. That is their ethos. That's why I always thought that if Secretary Raimondo were to take over for Janet Yellen, what you would have is a treasury that would recognize that the market is for all. Right now, I think they think the market's only for the rich. They seem to be oblivious to where your 401k is. It's kind of. I think it's part of the problem of why Biden is perceived as being bad for the economy. That he doesn't ally himself with the possibility of making money in the market, which is something that Americans did have pride in for a long time. I thought they could. They don't think so now.
The stock market, you think, has become more foreign to the middle class?
Yeah, it's just another. I'm not saying they think it's fixed. I think they just say it's not for us. Like look, a 5-year CD is not for us. Again, you could argue hyperbole, but I probably speak to more individual investors than anybody in the country, both in the show and when I go everywhere.
Yeah.
I don't meet people who care about the stock market. I was walking down the stairs yesterday, and this guy said, "Listen, what do you think about NVIDIA?" And I said, "Here's what I think. You're the first person to ask about a stock, and I think NVIDIA works. I think it goes higher. But I used to meet people who owned Apple, and we do bottle signings for my wife's mezcal. And be like, people want to know about the stock market. People don't want to know, but they think they just think I've got a 5% CD at 5 years. Like, why do I have to risk it in that crazy thing that's the stock market? That's our
Well, isn't that just a function of there being alternatives now?
Yeah, absolutely. But I also think that nobody thinks that. Remember, the Magnificent Seven, no one was really in them. I always feel like, well, the institutions were in Amazon. Amazon's great. I meet people who own Amazon. The stock prices, all of these companies never split. They were very anti-retail. The big institutions don't want them to split because then the commission would go higher. But other than the fact that when I named my dog Everest, renamed him NVIDIA, that's really the big impact that I've had.
Yeah.
That's kind of
Okay. It's gonna be another one of those mornings.
situation where
Well, it's fighting for attention.
Yeah, pretty much.
yes.
In the country.
It doesn't have any share. It certainly doesn't have any spokespeople. I mean, I haven't met a person who say, "Listen, I am for the stock market," other than Jim Raimondo. And Secretary Raimondo is for it because she's in favor of corporate wealth, which helps workers. It's a very positive. She's a constructive individual and a negativist White House for capital.
There is a report from our Hugh Son, who covers banking, about Citi today, and a plan by Fraser to, in his reporting, cut at least 10% at several divisions.
They've got to figure out whether the book value is phony. And if the book value is phony, then the stock deserves to be at 42. I mean, the book value is substantially in excess. No, it's like kind of one of the great untold stories. The book value is well out of the common, and the government, but the government is unique.
Okay. That's another one. Okay, not too bad, not too bad. Still 5 minute on ES is still looking pretty good. It's respecting this lower high. So as long as this lower high on ES can hold, and let's see the Dow. Dow's looking good. 30-minute candle on Dow has gone red. Nasdaq not so much. Nasdaq is still playing the game. Typical. Top. It's like, hold, do your shit. Stop playing with me. You got time, bro. Let me check my FX book. Oh, there we go. Nice, nice. Go ES. So I'm short on ES on the Forex side. I am looking to scale in on the future side, but I want to see a red candle, man. I need to see a red candle. If we can at least break and close below 43.79 would be sweet. Still sitting on my hand.
That's a good leadership group. Finance is high. The consumer, we're going to stick with the
What the hell
hospital
am I just do?
because the consumer seems to be high. I want to see whether the home builders are separate.
What is it?
Or if they're just so constrained. It doesn't
XRP?
matter. I think the rental markets go down because a lot of people build rental markets. But don't take Texas Instruments down. They don't want to be talked about. Their conference call was so horrible. I felt insulted myself. Yeah. It's interesting at the house. Oh, look, that's an interesting
Nice.
group, the home builders, because they traded right up with the 30-year going down.
And we'll get Horton later on this week.
Yeah, Horton's going to have a great number because that's what Horton does.
Bunch of initiations of Merck, and I wonder if you were surprised at how many overweight survived.
Yeah, it was because the Merck's trading at 24 times next year is the average. The industry's trading about 11 times earnings, so that made no sense. It just seemed like it's funny.
Yeah.
All the IPOs that have come out have really stunk in the aftermarket. I want to see what happens with ARM, because I think ARM could be good. The partner is we got a partner with NVIDIA, but
Facts. I'm short the Dow. I'm looking for that. I'm looking for that nosedive. If it can break below the morning's low, that would be just amazing. Okay. Let's go. Let's go. I won't. I wonder if we can get a nice drop down to.
Because one of the things that makes it so that there's you want to stop a rally, you have to have something
Come on, baby. There you go. Looking good. Looking good.
Well, I got bad news for the Bears. The earnings season, so the extent of the earnings season that matters is very lightweight. Interest rates, yeah, they can go up a little, but
There we go. Come on. Come on, yes. Yeah, there's so much downside potential on all three indices. I mean, ES, we're looking at over 200-point movement to the downside from where price currently is. So if you were to scale in, purchase some puts and stuff like that, and if you can hold this for the next month or so, yeah, I mean, Bank City. Granted, you know, once we get like, even now it's like we still really need to break this market structure. And if we can break this market structure, oh Lord, there we go. Yeah, that's the one thing I want to see. Like once we see a solid close on ES below 43.27, pull a Ray Charles, cover your eyes and just hit sell. There we go. We breaking down. Yeah, baby. Go. Yes. Ooh. Holla. As do I. Look at Nasdaq. Yes, baby. Oh, if that candle can go red. Oh. I want a 30-minute candle print red on NQ. All right. 30-minute candle on ES has been red. So is the Dow. We just need Nasdaq to follow suit. Nas follows suit, and it's a wrap city. All right.
I feel very frustrated about talking to the Secretary of Labor. I asked her a very serious question about immigration. What I call fanciful, not factual answers. I think it's time to call people out to give you factual answers because.
What do you think about 410 puts December 16? On SPY?
Give me some
She did say she thought the economy to a position where
Check out check out 423 September December 6th puts, because it'll go below that sooner, right? So if you get like 423 puts for December 6th, and if, let's say, right now they're relatively cheap, you would make way more than if you were to get the 410s, right? Because you want to go slightly out of the money, but you don't want to go too far out of the money, right? So anything beyond, like right now, price is at 435. So if you go anything beyond 430, you're outside of the money, which is going to make those contracts cheaper. Matter of fact, let me take a look and see what we got for SPY. SPY. Options. Let's look at. I'm looking at December 8th. So let's look at. All right. So 423 December 8th puts are going for 273 and 275. Let me take at what 410s looking. 410s are cheaper. They're going for 130. So it's just gonna be a depending on what you wanna go. So let me see. I'm gonna look at these 23s. So
the stock price at least is not doing its ACL, Jim.
so I think I'm probably gonna buy. I'm probably gonna end up getting 10 contracts of 423 December 8th expiration. So that'll be roughly around 3K, and if price can go substantially below that, like to fill the gap before then, 3K would turn into maybe north of 10K in return. Yeah, and possibly even up to the $17 or $15 range, right? So picking it up at 2 and then selling it in the $10-12 range would be really, really good. So that's what I'm gonna be looking at. So yeah, so
Thinking of booking, Jim. Tomorrow's the 1 month since October 7th, and what that's done to the market too is been hard to quantify.
I think that anytime it's existential for any country.
And I can even do puts on ES. Yes, baby, let's go. Get it. Go for me. Ooh, baby girl, she printing. She said I'm about to zip. Okay. Yeah, baby. Ooh, go down. Go down. Yes, sir. Yes, sir. Give me that sauce. Ooh. Uh-oh. Who hopping in with the fellas? Who hopping in with the fellas? Nice.
Yeah. Well, we've definitely moved some assets into the region.
Copy.
Ships, aircraft carriers now.
Yeah, it looks good. I mean, definitely looking good. Anyone that got filled at the 4388 area, looking good. I'm definitely seeing a potential drop to 4370 on ES. Just gonna be a matter of waiting out, and now we're back at the regular times where London will be closing at 11 a.m. this morning. So let's see what we get. Come on, baby.
Steady open so far. Down to the point. S&P 4360. We'll watch for some activity in fixed income this week. Yields up a touch.
Yeah, I'm short Dow, I'm short Nas, and I'm short ES on the Forex side. So I'm up. Yeah, I'm up 7 points on ES shorts on US 500. So it's like not too shabby. Come on, baby. Yo, beautiful M pattern on the 30-minute formed for ES. Full completion of this M pattern would bring it down to 43.26, but I do see a potential bounce at 43.70 or even 43.63. Last week, like, I needed it to break 43.60 and it didn't. So let's see if we break that today. If we do, potential slide all the way down to 43.46. And this is just me looking at the 30-minute time frame, which I guess I could pull up here. So 30-minute time frame, we need to break below this level, 43.60, and upon breaking that, we drop down to 43.46. Mm-hmm. Yep, Darwin just added Nas. Now we just need Mr. Miss ES to follow suit and just keep it going, baby. Keep it going. Now don't play with me, girl. Do your thing. Come on, follow through. Follow through.
Take a look at Bumble. Whitney Wolfe is going to be leaving the company, stepping down after a decade. Stocks had a rough run, down some 40% so far year to date. Overall, some consolidation coming off of last week's big run for the Bulls. Best week in just about a year. We'll get stop trading in just a moment. Don't go away.
All right, I'm back. I'm back. Okay. Typical games. Typical games. Mm. Serious. What be up with CNBC?
Only $30, so really able to control that.
All right. Yeah.
Change your life.
Good Monday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla. We are live for you, as always, from Post 9 of the New York Stock Exchange. David is on assignment. Taking a look at stocks here, S&P 500 continues its rally coming off of last week, which was the best of the year, up 0.2%, so not quite as strong as we've seen, but a lot of groups in the green: information technology, healthcare, consumer discretionary leading the charge higher. Real estate and industrials are the sectors that are lagging. The Nasdaq's up a third of 1%. Again, continuing its rally thanks to the names that are
Yo.
working today. Hiking rates. The discussion
There
is
we
moving to
go.
when they're going to
Drop
start
it like it's hot,
rates.
baby.
And there's
Go.
a great chart today about the
Yes,
fact
sir.
that now the Fed is expected to start cutting in June instead of July. So the market moved up a month, and that they're expected to do some
Nice.
significant cuts before the end of the year. Here's a look. So the yellow shows in October where how much the market thought the
What?
Fed and the ECB and the Bank of England would be cutting, and then the blue shows as of Friday. So
Probably.
just shows that
Yeah,
we're
it's
expecting
looking
a lot
like
more
it's gonna
cuts,
catch some.
almost 3 maybe by by September 2024. I don't know how realistic that is for a Fed and an ECB and a Bank of England that keeps telling us higher for longer. But that's the setup, and that's why the market's rallying.
Yeah, it's certainly not clear how likely it is, and that has moved around a lot in the last few months. But if July was the final hike, if you can somehow gain some security, and we don't know for sure, if they were done in July, historically, the average time between the last hike and the first cut is like 6 or 8 months, I think, in a typical cycle. Now, nobody thinks it's a typical cycle. The point is, the market is correct to say if the next move is lower, then you go just over the horizon of what's immediately foreseeable in terms of economic data, and maybe we're going to be cutting around that point. But it is one of those things where it's not clear exactly how much of that is really forecast and how much of it is just kind of like, well, let's look at the range of probabilities. After the market move last week, 6% higher, a 6% move in the S&P in a week is never a fluke, but it does show you just how much people were leaning in the other direction. So you got another late October low, a really strong momentum reversal signal in terms of going from really, really bad market breadth to really hot, really strong market breadth. The market needs to cool off after that. The average stock in the S&P basically retested the low from last October. So you went back 13 months. So all these things are positives for saying that that was probably a low that has some credence to it, right? It wasn't just noise. On the other hand, we're still in the same zone of we want the economy to slow, but not too much. And you want the economy, the labor market to hold together, but not so much that the Fed's back in the game. So we're still trying to thread the needle is the short version.
If you look at the move in rates,
Keep it going.
a lot of people were talking about how
It's not going to fill the gap today, but we're going to get close. We're going to start the process. Beautiful, beautiful.
The move that we saw there can be explained a lot by positioning, just covering shorts, because everyone was on the wrong side of this trade. First, we got news that the Treasury wouldn't have to borrow as much, and then we got news that the Fed was a little more dovish than expected, and then the worst jobs report was just a triple whammy for those shorts.
But that's always the way it goes, right? I mean, always in retrospect, it's like your lost keys are always in the last place you look. You know what I mean? And so that's always the way it is that basically we had 3 months of concerted selling in stocks and bonds, where basically the sellers were in control and they doubled up on the bets. And yes, you get to an extreme, the tension gets released. And now where we are is the S&P and the 10-year Treasury yield today, where we were in late September, which is after the prior Fed meeting, when we started to really get the higher for longer message, when we started to get worried about supply. So yeah, it's obviously a little bit of a fragile balance, but I do think that if nothing else, these levels from the first half of this year, 4,100 on the S&P, kind of held together, and that was really when we started to price in the decent likelihood of a soft landing.
A lot of people are talking about the seasonally strong period of November to December, and then Mike Wilson of Morgan Stanley maintains his bearish stance and says bear market rally, 6% move isn't normal.
Look,
how does it feel?
Well, it's certainly
these bounces are ridiculous. It's like, come on, bruh.
I have not been that hung up in defining whether we're in a bull or bear market. Because if we say we've still been in a bear market, it's only been the mega cap stocks that have gotten us out of that definition. Okay, but still being in a bear market doesn't mean we go back to the lows or make new lows. It just means, we've been stuck underneath an all-time high for almost 2 years now. The NASDAQ peaked almost exactly 2 years ago. So you call that whatever you want. We've been in this kind of wide swinging range. Earnings have progressed. They're now tilting higher again. Valuations, if they were a problem at one point, they're less so now. Even though they're not cheap, I would say that they're kind of not the swing factor at the moment. So, it's still we're still gonna fight it out on both sides, whether we call it a bull or bear market.
I think it just depends on what happens with bonds.
Yeah, that's a big part of it. Absolutely.
Yeah. All right, so where are we? The Dow's at 6-week highs now. S&P and NASDAQ at 3-week highs. Is this rally for real? Oppenheimer Asset Management Chief Investment Strategist John Stolfus recently dropped his S&P 500 price target from 4,900 to 4,400. Joins us at post 9. So basically, where we are right now, did you do that too soon, John?
I don't think so, Sarah. I think when I look at it, if anything, at that point, what we said is it was right-sizing expectations from that point to the end of the year. I think 4,900 probably is still too high if we were back at that. But likely the 4,400 today has a good chance to be surpassed, and we would have to think, we may have to raise again. Our discipline is such that we don't raise our target until our target is surpassed. 4,400 was our target for this year that we put in last December, and it was surpassed at the end of June. At that point, we had to raise. We took about a month to raise.
This back and forth consolidation, like this shit's so tight. Where's my patience out?
It was only 6 to 7% upside from that level where it had closed, when the rally really had taken off. And as a result of that, the odd thing is we're still looking, when we put this new target in last week, or the old target back in 4,400, it was 6 to 7% upside, and then wham, we had that spectacular rally last week. Some of which we suspect was short covering. Some of it was investors looking to buy babies that had got thrown out with the bathwater, which is not a bad thing to be doing. And a general feeling that the economic data and the Fed were pointing to, we were longer into, at this point, we're well over the halfway point, close to the end of a Fed funds hike cycle.
So does it make you feel better that bonds have moved so strongly in terms of yields? We were at 5%. We're now at 4.6. Is that a lot more comfortable place for equities?
Yeah, they're less. I think it's less likely to say that they're competitive with stocks. If you look at the potential for stocks to improve with the amount of innovation and discovery that is occurring within technology that affects all 11 sectors to some extent when we look at it. And our thought is here that, at where it is more realistic, we think, in expectations. But I don't think much more of a rally in bonds would be appropriate at this time. But who's to say the bond market's going to listen to it?
Well, the argument from those who did close their shorts was that the world's just too dangerous.
Yeah,
right.
Yeah, the world is
need some
always
nice follow through. You know what I'm saying?
I've been in this business
Like if this thing can break Sunday's so far today's low, which is 43.74. Come on, baby. We that's what I'm talking about. Do your thing, baby. Do your thing. Okay. I'm up 10 points on the Forex side on ES shorts. Let's go. Probably gonna move my stop loss to in profits 5 points. And then let this heifer do her thing. Bro, slide for me.
The bullish case today is that our corporates are so nimble that they've already done a lot to brace for the things we're just dealing with now, right?
Yes.
That's the margin story about Q3.
Yep, very much. I mean, just look at this. We're growth. I think over
Let's go. NQ. I need to see NQ below 15,150. Come on.
With earnings of 2.9%, that's exactly what they were
looking like it's going to be a very early day for me.
Coming into this earnings season. So that reflects on a resilient economy. And part of that, we give credit to the Fed, quite frankly. We think it was overstimulation at the fiscal policy level is what took us to record highs in terms of inflation. And the Fed had to step in for the financial crisis. Otherwise, I think we probably would have had a deep recession back then.
Really quick, did your numbers change for S&P earnings next year?
Not yet. We have not looked at next year yet. Usually it's in December when we finalize our thoughts on what next year is going to look like. But we are expecting the Fed will go into a prolonged pause next year in the first into the second half of next year with likely a cut by the end of 2020.
Nope, she gone. She coming.
So you're behind the market on that.
Nikkei,
It's
bro.
actually on a chart saying the market's now expecting a cut by June and a few more cuts before the end of September.
And it sounds a little bit optimistic with inflation is stickier as is evidence when we go shopping at the local stores or when we consider what people are paying for rents, even though they backed off a little.
Yeah. All right. Well, John, thank you for coming in, giving us your updated
Always
views.
great to be here.
Yeah, John Stolfus. As we head to break here on Squawk on the Street, here's our roadmap for the rest of the hour. The state of travel and the consumer. Expedia CEO joins us on the back of the company's earnings beat.
Plus some regional banks coming off the best
Slide,
week since
baby. She gonna break. Break that 74. Break that low. Break that low. Break that low. Beautiful. Beautiful. Come on. Come on, baby. Break it. Break it. Break it. Ladies and gentlemen, do not be shy to lock in some profits. The way this market is, we could easily come right back up to that entry. So if you're in profits, think about locking some in. I'm considering it, highly, highly considering it. I just might, to be honest. First target is 43.70. We're 5 points away from that. I don't mind. I'm over 10 points. What to do? What to do? To take it or not to take it? I'm gonna take it. Fuck it. I'm gonna take it. I'm taking profits. Locked in. Allowed 43.76. I'm allowed 43.76. I'll be watching for another pop to create a lower high and reshort. So yeah, so nice. There you go. Yeah. It's okay. Don't even do it to yourself. Don't even do it to yourself, because if you do that, that's gonna have you like, yo, like it's gonna have you holding trades a lot longer, and it might have you taking trades that, like forcing a trade, bro. Don't even do it. Like if this thing drops to like if it goes to like 43.60 and it's like, yo, I made 11 points, I'll take that. You know what I mean? Yep. hmm Yep. Yeah, that helps. That helps, just as long as you don't do the part where you're like, oh man, like I should have held a little bit longer and whatever. Just analyze. Yeah, like analyze, take the trade. Who, me? Oh, you got.
Welcome back to Squawk on the Street. Expedia shares higher after seeing the biggest jump in 3 years on Friday, actually losing a little gain here. When it did notch a 19% jump, company posted better than expected third quarter numbers.
Mm-hmm.
Vice Chair and CEO Peter Kern joins us this morning in a first on CNBC interview. Peter, it's great to have you. You guys led the S&P on Friday. I wonder if you think people have overdone their worry about the consumer in terms of travel.
Can you hear me,
Mm-hmm.
Carl? Sorry.
Yeah, I got you. You got me?
Yeah, I mean, I think consumer travel's still looking pretty good. Obviously, we saw a little bit of noise we talked about in October, which felt like a little bit of fallout from what was going on in the Middle East, but that's kind of normalized, and the consumer still seems to be traveling, and we're seeing good demand really across the globe.
I looked at some charts this morning, sort of gauging whether or not corporate is going to rebound the way we were hoping maybe a year and a half ago. Are you frustrated at the degree to which corporate travel does not appear to be tracking
Yep,
leisure?
Yeah, I mean, we're not as exposed to it, so we don't worry quite as much about it as we used to.
Exactly.
We power a lot of corporate travel partners,
Woo.
and it hasn't come back certainly to the pre-pandemic trends in the same way that leisure
Shit,
has.
that was a sweet ass exit, man. Look at this shit pop.
Travel in the back end of the year,
Okay.
but it's still pretty robust, and I think for us it doesn't make a huge difference. But of course, we'd love to see more travel back. We'd love to see our partners in air and hotels, doing better in that space. But there's been a lot to replace it, including much more premium leisure travel. Conferences are back, so we're seeing the conference business
Word.
across the board. We hear it from our supply partners everywhere that business is back. So I think it's the day in, day out corporate stuff, which certainly is a big business. We'd love to see it back at 100%, but it doesn't have a huge impact on our business.
No sign of a slowdown,
Mm-hmm.
Peter. It's just interesting because Airbnb.
Yeah,
and
yeah.
Booking
There's
both guided to
there's a
deceleration.
better connection
Yeah, well, we have
when
very different
there's a better
business
mental and
models.
emotional connection when you actually write stuff out versus typing. Like I mentioned, like for me, like when I type, it just seems so impersonal. It's like there's not much attachment to it. But like when I write stuff, bro, like I'm literally taking time. Like I'm writing. You know what I mean? Like yeah, it's different. It requires more mental like physically write stuff out instead of
It's a
typing.
good tailwind. But most places are starting to normalize now. We're much more highly exposed to the West, which normalized earlier. So we're much more excited about the work we've been doing to build our business, improve our technology, help our customers do better. And that's really starting to show in what we've been doing in our loyalty program, our product, et cetera. So we're in a different spot. We're kind of coming up on things, whereas some of our competitors are normalizing post these tailwinds.
What about VRBO? What does demand there look like, especially, with Airbnb being more competitive?
Yeah, well, VRBO had a great COVID, as you know, Verbo. Sorry, I said it like you said it, but it's
Yeah.
Verbo.
I know. I can't keep track. You keep
Yeah.
changing it.
We got to stick on Verbo. Verbo did great during COVID. We saw a little bit of a
Mhm.
pullback post COVID as people went to more cities where Verbo has less product. But we have great product in cities, and we're trying to make sure consumers understand that. And we went through a big migration, which we've talked about, where we put Verbo onto our main technology stack now, which we literally finished a few days ago. So we're really in a nice spot, we feel, there, where the trends are, we believe, going to go our way. Geopolitical unrest, ironically, usually helps things like Verbo, where people feel a little more comfortable in their own space. So if that continues, that will only help Verbo. And the product's improving. We have great supply, and Airbnb, they do great in shared spaces and other things we don't do. Again, I think that market has kind of topped out in big cities, et cetera. We'll see if that continues, and they're more exposed to the lower end of the market because of that, because those are inexpensive options. Whereas our whole home product tends to appeal to the middle market or upper market, and we think there's a lot of opportunity there going forward.
I
How
keep it
far out
basic,
do you
man. I
think
just
your
keep straight up
visibility goes right now? Do
notebooks.
you have a good window into areas beyond holiday, spring break, summer of next year yet?
Not really. I mean, the rest of the year we have a pretty good idea of. The big booking season for in most years is really the beginning of the year for the big leisure booking season in the summer, spring, summer trips. So, and that's true for Verbo. That's true for our core hotel and air business as well. So, we don't really have it way out, but I think for the foreseeable future, things look pretty steady.
So how do you think investors are processing your story? You're clearly giving a very bullish outlook. Your stock trades at less than 12 times next year's earnings, a lot lower than competitors like a Bookings, for instance. What are they missing on the story?
Yeah, I think people have been waiting. We've talked about it, but we've been working through our tech transformation for the last several years. We consolidated our brands together, created one loyalty program. These were big changes for us to really change where we were trying to go as a company. And when you're making changes like that, it's a little bit of a messy business. It's not like a clean.
Glad I took profits.
Your growth tracks the market perfectly. But what's happened now is I think investors are starting to realize that we've done the work. We're set up well to go forward. We're in the best position we've ever been technologically. And that's really what the business is about. It's about having the best product, the best service, the best loyalty program, the best consumer experience. So we've been investing in that for years, and I think the market has taken a wait-and-see attitude. And I won't speak for the markets. We've been happy to buy back our stock really cheaply.
Do you think the market will go lower in London?
We're just going to keep doing
Possibly the market may go lower when London closes. I mean, we're 30 minutes before the London close, which we tend to end up having that volume, that pop or drop. So yeah, so I'm really glad I took profits. So shit. So now I could look to potentially re-enter or just fully call it a day. As long for the remaining of the day, ES closes and stays below 43.91.75, I'll potentially look to short, but that's a big if. We'll see. If anything, I'll come back later in the day, but I'm good for now.
Key differentiator from Airbnb. It's really the only loyalty program in vacation rentals. So A, it's better than Airbnb, and B, you can spend it for anything. So if you earn a bunch of one-key cash on a Verbo, you can go use it on an airline ticket or on your next hotel stay. So we think it's the most flexible in the world. We think it gives customers added benefit. It's not instead of other programs. It's in addition to those programs. And again, we're just trying to reward and give the consumer the best experience we can give.
Peter, appreciate that very much, especially coming off the quarter and the reaction. Good to see you.
Good to see you. Thanks,
Peter Kern.
Take care.
Regional banks coming off their best week in years. Meanwhile, Citigroup considering deep job cuts. Where the financials go from here? We're back in a moment with the Dow now back in positive territory up 35.
Mm. Okay, okay. All right. Nice rejection. It's still holding below 43.84. Not too bad, not too bad. Although I am tempted, I am going to wait. Oh my god, are you serious, CL? Oh, she ain't playing. She did a okey doke. Did she do a okey doke? She's like, yo, okey doke, we out of here, bruh. Yeah, yeah, yeah. The notebook. Yeah, yeah. I still. Yep, yep. I still rock with those, bro. I know. I probably gotta get a little bit more professional one. Oh, that's nice. Yo, basic, bro. Bro, keep it simple. I keep it simple, my G. I mean that looks nice, but it's like the amount of writing that you do, bro. Like this is, I probably go through one every 2 months, maybe. Yeah, yeah, because like I do the trading log, and then I also do like my affirmations and stuff like that. So I go through like, yeah, like one every month and a half. Re-entry.
Regional banks coming off
I
their best
I
weeks since
haven't
November.
re-entered
There's
yet.
a
I'm
potential
waiting.
end to rate
Honestly, at
easing
this
here.
point, I probably want to
Let's
wait
see
for
if
the
we
London
break down that
close,
more, Leslie.
before re-entering. It wouldn't have been a bad re-entry at 43.83, and then just risking to 43.88. But I'm just gonna wait. I mean, I made 11 points. It's not a bad morning so far, and just the movements is a little sluggish. I mean, look at this consolidating. Look how long it took us to really get. It took an hour, uh, just about for us to really get that win, and then literally within the first few minutes of that candle closing, it took it all back almost. So I'm just gonna wait. I'm not too eager to get back in. Just stick and move. Once we have a full, solid confirmation of okay, this thing is ready to drop, absolutely. But for now, if you're profitable on a day, don't go back in unless we get a nice breakdown.
Those amounted to more than $558 billion at the end of Q2. We'll get Q3 composite figures from next month from the FDIC. But remember, many banks took on more bond investments during the pandemic when they were flush with deposits, but yields were low. But more recently, as yields have soared, the value of fixed rate bonds plummeted, contributing to paper losses for the banks. But it's unlikely that those losses will ever be realized, but it does impact tangible book value in the meantime. So in theory, when you see these rates decline, TBV growth accelerates. accelerates, which is, why you're seeing some stock price reaction there, guys.
Thank you very much. Our next guest upgrading KeyCorp to outperform, raising the price target to 15 from 12.50. Also covers Citigroup with some news there today. Let's bring in David Conrad, Managing Director at KBW, a Stifel company. KeyCorp has been one of actually the bottom, the hardest hit bank stock this year besides Comerica, down 35%. Why upgrade now?
I think actually Leslie hit quite a few of those points in the intro. One of the main concerns with KeyCorp is the capital and the impact of AOCI or the negative bond marks will place on capital. And we feel, for names that are beat up on capital and have lower than peer credit risk, the end of last week, the economic data that we got was a game changer. The increased productivity report we got and the weaker jobs report really put the pressure on off of the higher rates, and so that should allow capital to rebuild more quickly.
Yeah, bro, nah, man. Yeah, all that is extra, man. I would like, call what you want to call it, man, but it's like I keep it to the straight dollar notebooks, bro.
Derivatives of short-term bonds that mature over the next 4 quarters, and as those mature, their average yield is under 50 basis points. So our EPS.
Yeah, true. Cause I Nah, I don't know. I never knock the hustle, man. It's like, cause like some of them, like they leave like a little space for you to like draw and stuff like that and whatever, which is nice. It just, it's they do some of the work for you and whatever, which is nice. But I'm like, but for me, I'm like, nah, I'll do it myself.
The EPS lift will actually occur just as the runoff of these really low yielding bonds occur.
Pretty much.
You mentioned in the note the discount to JPM. I wonder what you made of Diamond's reported sales of that stock the other day.
Yeah, I think it's a bit of a headwind, but I
Mhm.
think if you go back to a competitors conference, I think Jamie was kind of quoted saying he would be a buyer of most bank stocks right now. But the reality
But
of this is
isn't that ICT get up where it's like, yo, you need all the stars and planets to align for you to take a trade? It's like, bruh, y'all waiting for this, that, and the third, and I'm already in like 1 or 2 trades, already done book profits, and you're still waiting for an entry.
City, so I'm curious what you made of the CBC
All right.
report. Our Houston reporting layoffs of at least 10% in some departments as part of this previously announced restructuring program. I talked to Jane Frazier about it a few weeks ago. She wasn't ready to put a number on it. Said that'll come toward the 4th quarter. Does this number make sense? Does it make the stock attractive?
I think it definitely helps. I mean, I think part of our concern is really heavy investment cycle in city, updating technology, and part of the headwinds here is that they sold a lot of the consumer assets to beef up capital right at the time the Basel III Endgame comes out, which kind of offsets some of that benefit. And so I think that's been a near-term headwind. But I think they talked a lot about expenses. Part of our concern is that just on legacy sales, or is this in the core business? And I think this helps us give more visibility that bending the curve will also be on the core business, not just asset sales.
All right, David, thank you very much for joining us on the call today. David Conrad.
Let's get a news update this morning with our Silvana Hanau. Hi, Silvana.
Hey, Carl, good morning. The Secretary of State says the U.S. is working almost every
It's taking, it's learning something and then making it your own, and then obviously adding to it, however, if it's your needs.
Israel.
Engage the Israelis on steps that they can take to minimize civilian casualties.
Instead, the U.S. remains focused on freeing hostages and getting more aid into Gaza in the coming days. Meanwhile, Israel's military is urging people to move south. Military officials say troops have split Gaza into 2, and civilians will be allowed to evacuate the north along a main highway. And Donald Trump's $250 million civil fraud trial is getting underway in New York. The former president is on the stand today to deliver testimony to a packed courtroom. Trump's adult sons testified last week. His daughter Ivanka will testify on Wednesday. Send it back over to you.
Silvana, thanks. Still to come this morning, media stocks and correction. Disney and Warner Brothers Discovery shares far off of their highs. guys. We've got the playbook on both names going into earnings next.
I'll be right every single 100% of the time. Come on, make that shit. Zia, why you gotta break my heart like that? Mm-hmm. Little under 30 minutes till London closes.
Disney naming a new CFO ahead of earnings this week. Pepsi's Hugh Johnson taking over the same job at the media giant. Warner Brothers Discovery also reporting results later this week. And the writer's strike continues. The studio is making their last, best, and final offers to the Writers Guild. Joining us now is Citigroup's Jason Bazinet. He cut his price target on Disney this morning to 110 from 120, but maintaining a buy rating. And guys, just for some perspective on Hugh, as you know, I've covered Pepsi and Hugh for a while. 55 straight quarterly beats is not a shabby record for a CFO. That's Hugh's legacy over at PepsiCo. I guess, Jason, Disney could certainly use that. Do you look at him as a CEO contender?
No, but I the things that Disney have much less to do with sort of managerial changes that have much bigger fish to fry, just in terms of the core business and the fundamentals.
Right, but I do think that the Hugh news is good for Bob Iger and good for Disney because he's one of the most seasoned CFOs in America. Top turnaround Pepsi. Also, interestingly, was on the other side of a Nelson Peltz battle with Pepsi when Nelson wanted to break up that company in two, and Renouille was the CEO at the time. It's interesting. Given
Do you guys have any questions for me?
Disney right now, where do you think that goes?
Any questions? Anything you guys would like to go over? Take a look at? I'm not going to be re-entering short on ES. Maybe not until the end of the day. The way it's looking right now, we could get another push to maybe create a new high and then sell off at the end of the day or retrace at the end of the day. I've been noticing that every day towards the end of the day between 3 and 350, it'll do about a nice 12-point retracement from whatever the high point that's printed at 3. So be on the lookout for that today if you want to try to catch something towards the end. But I'm going to be jumping off at 11. Made my money for the morning. So now I'm just going to answer some questions if you guys have. If you guys don't have any questions, that's cool. But I know sometimes you could be shy, so you can send me a direct message and ask me messages via that way. So when did you get in short? What time? I got in short on this time frame, so I want to say it was 9:38, 9:40. So it was on this candle right here. I was trying to get filled at 43.89, but I didn't. So I ended up taking the short on the forex side, which was I mark it in. And so on this side it would have been 43.86 that I entered short, and then we had a nice drop. I locked in a little over 10 points on the forex side of my ES short.
For ESPN, I think Disney's contemplating something quite different, not a sale of ESPN, but essentially pursuing sort of equity ownership, presumably by the leagues, to insulate Disney from getting into a bidding war for sports rights down the road.
I mentioned the strike. You know, it's the actor strike that has the last, best, and final offer. Now that I think I said writers, they're back.
Yes.
How is it accumulating as far as the pain for a company like a Disney or a Warner at this point? Now 114 days in.
You know, I would say there has not been a lot of pain. You know, there are certainly secular pressures in the pay TV ecosystem. Those have not gotten worse in the wake of the strike. If anything, the free cash generation has been a bit better because of the strike. I think investors are smart enough to know that it's transitory. I think most investors I speak with believe that the actor strike will get resolved in the fourth quarter, and we should be back. And I think the broader point, and I think this is right, is that we're not really talking about large dollar amounts here on either side. You know, this is not going to break the bank no matter how.
And there it goes. See?
So what the street really wants is
Trust this
to
heifer.
find us to remove one variable from the playing field, because we have enough variables as it is.
Although people look at the auto strike and think about scarring on the industry or on the business model over the long term, and some of the retrenching that you could argue it's prodding on the EV front. Do you see analogs to the actor side where EVs are streaming instead?
No, I don't. Simply because all of these contracts are really negotiating sort of the minimums that are in the industry, which really are not needle moving. So I think it's different. Auto side, just for everybody. This is just a very different animal. I think the pain has been maybe a little.
The benefits of trading the futures indices with a forex brokerage is this. Every position that I take on the forex side is individual. Okay, meaning I could take a short at where it currently is right now, and let's say it pops another 5 points, I add to that position. Once price starts coming down, I can choose which position I want to close out. Furthermore, the margin requirement is less, and within a forex account I can actually hedge my position, meaning I can be long and short on that same account, whereas on the actual futures you cannot be short and you can't be short and long on a forex on a futures brokerage, because as soon as you try to flip the position, it's going to close you out unless you trade the following month's contracts. So benefits of trading indices on a forex brokerage is that less margin required. Every position is individual. It's not first in, first out, or last in, last out, whichever way you have it set. So if I add to a position, I can close out that position once it's in profit, or the whole thing. So those are the benefits to it, and plus the position size that you can play with the position size. So like when I take a full contract of ES, I can't split that contract in half unless I have 2 or 3 or 4 or 6 contracts of the mini or the micro, right? Whereas with forex firms, you have more control to what you can and can't do. So hope that answers your question, Bo.
This isn't just the Bumble app. This is Bumble plus Badoo, which is a big dating app in Europe, and they've been making actually other acquisitions to sort of round out the offers that they have for the whole dating ecosystem, including a new app that they recently
really important. It's about maintaining the quality of your relationship once you're in one. So I think they see this now as sort of a building opportunity, and the fact that they have this strength both in Europe with Badoo and with Bumble, which continues to expand internationally, that they don't see this as being a time to sell. Remember, they have been rivals with Match
Okay,
Group
so
and its
ES
tier
is still making
versus
lower
the
highs. That's a good sign.
I mean, two things stand out, Julia. First of all, just how young and impressive Whitney Wolfhard is. She's what, 34?
Question is it gonna
Right
hold?
now, I think she was one of the youngest female billionaires, self-made.
15 minutes left till the London close. So we'll see what they
But the
do.
stock price, I mean, I'm looking at the stock price since she did take it public. It's amazing to me. It's now below $13 a share. Why is that?
Well, look, there's so much competition.
Weather's
in
kind
this
of
space, and I
crappy.
think it will
The market's movement is kind of crappy. So shit, should have took in today off.
There's been a lot of concern about
Not
competition
really.
with
I made
Match, but
money.
also how much are people willing to spend on these subscription services? Is dating something that people will find for free once they're out in the world, or that they'll find effectively for free on Instagram or some of these other platforms? So I think that's really
Nice,
what the
very
focus is going to be on
nice.
tomorrow when they report, not just the opportunity around advertising.
Yo,
the rest,
ZL,
but
I
the
freaking
really
hate
important
you.
business, which is this premium service that people will pay for. How much are people willing to pay?
Bruh,
For
yo, I
dating
had a
service?
long
How
at
big is the addressable
49,
market, and
30
where else
something, and
can
I
this
took
company
profits
expand? Is there
and
really a
try to see
market
if I could get like a
in
better
Bumble
entry in this.
Biz, which
Now
is
this thing wants to
their
pop
business
almost 2
next
points.
platform, or Bumble BFF, which is a friend finding platform? So what are the other places they can expand to, and also how strong and how big is the addressable
There you
market for
go.
the core dating business?
There you go.
All right, Julia,
Come
thank
on,
you.
baby.
You know, they've been talking a lot about how AI is going to
Come
transform
on.
dating too.
Come on. Yes, we need you to break down.
Pretty muted open here this morning, down some 41, still around 43.65 on the S&P. Sector-wise, a bit of a mixed bag today, although the VIX softly close to 15 this morning. We'll take a break. Be right back.
Toodles, go, baby, go. Do your thing. Come on. Break. Uh-oh, fake out. Was that fake? Yes, it was. Maybe. Maybe. Come on. Come on. Oh, she can start forming lower highs, man. That's going to be so solid. And when I'm saying lower highs, I'm referring like on a higher time frame. So far on a 1 hour time frame, we have a lower high, which is right here, 43.89. So if this can maintain, and let's say we break below 43.60, and then maybe we pop up to like 43.75, 74 area, have that be the next lower high, and then we make our way back down to like 43.20s, 43.10. And once we see price below 42.90, game over. Yeah, it's due to the London preparing to close. So, question is, are they gonna continue playing around once London closes, or they're gonna let this baby slide? And if not, we could probably see something at the end of the day. I really hope they don't keep this all day long, like just a sideways action, because damn, bro. Like I got shit to do, bro. I ain't trying to be here all day long.
which is why we've done nothing on students shouting "Free Palestine from the river to the sea," which is known. Okay?
I'm not giving you nothing. Don't even look at me.
We're talking about lynching members of the black community. That would not
Go
be
back to where you were, bro.
speech on campus. We're saying,
Yo, I show his dog like, yo, the minute he hears food or hears like a clinking, so yo, right at my feet,
throw
like.
them off this, into the sea. I mean, we just that would not be permitted speech on Harvard, and I can't imagine be permitted speech elsewhere. And the fact that it's allowed to continue, okay, and the university does nothing. That's when what started out as legitimate criticism of Israel. There's nothing wrong with being critical of Israel, okay? And you should be able to say whatever you want, which is critical of Israel. It's another thing when you're talking about these, eliminationist talk, right? Destroying a people, an ethnic group, okay? That's genocide.
Pershing Square's Bill Ackman calling into Squawk Box this morning to discuss the rising tide of anti-Semitism on college campuses across the country. Over the weekend, he penned a letter to the president of Harvard University, his alma mater, calling for her to take steps to reduce anti-Semitism on campus. He's just the latest, I think, in a series of steps he's trying to fight here, moral clarity. He's walking the walk. He visited Harvard, talked to some of these groups, including Jewish students, to hear about it. And I think he's highlighting something that might be able to resonate with companies and CEOs.
Wait, didn't you say was it George Soros or was it Bill Ackman that you said was like trying to like keep anyone that was like pro-Palestine out of their companies?
In groups,
Bill Ackman?
not really on minorities. And I think that Bill is highlighting this in terms of protecting free speech, but also for DEI
There we
groups
go.
that
Get on that
should
way.
include Jewish kids or Jewish employees who feel that they're a minority and they're being targeted over anti-Semitism. It should be no different, for instance, than the black community.
Why do they
or than the
always throw that word out?
LGBTQ community.
Anti-Semitism.
And I
Like, do
think that
people even know what that means?
on these DEI units as well. It's
Yeah.
certainly something I hear off the record.
I mean, his criticism comes after years of being an outspoken advocate and proponent for not only Harvard, but Harvard Business School. I know when we did our documentary on HBS several years ago, Bill was a big part of it. To hear him talk about this in this way comes with, I'd argue,
And he's not the only one.
yeah,
I mean, a lot
a
of
large
these
part of
numbers.
legitimacy.
The Wexner Foundation and others. And look, Claudine Gay, the Harvard president, I can't even count how many statements she's had to put out in the wake of the October 7th terrorist attacks because she has not been strong enough in condemning it. And these colleges, and it's not just Harvard, have a real problem with anti-Semitism. And I think the more people like Ackman, which pressure them, hopefully they can do some introspection and figure out how to fight this. Because it's not free speech when you're talking about hate speech. When we come
It's
back,
not free speech
the
when you're
CEO
talking
of
about
consumer
hate speech.
giant Mondelez, fresh off numbers last week showing no slowdown in demand for snacks. We're going to break it all down and where the business goes from here with Dirk Vandeput. That all kicks off at 11 a.m. Dow's up 20 points. We'll be right back.
No, that was not 20 points. It's up 9. They so be delayed, bro. Jeez, Henry. London closed, bro. 7 minutes of the London close. Like I said, once London closed, we'll get a better idea of what the hell they're trying to do.
After rising steadily since September and crossing over 8% on the 30-year fixed, mortgage rates have made a sharp U-turn in recent days. Our Diana Oleg joins us with what to make about that. Morning, Diana.
Good morning, Carl. Yeah, mortgage rates started dropping at the beginning of last week in anticipation of the Fed taking a pause in rate hikes. So the 30-year fix started on Monday of last week at 7.92%. It began to slide a bit Tuesday, then a 19 basis point drop Wednesday after the Fed paused rate hikes, and another 18 basis points Thursday as the markets digested that. Then Friday, 13 more points down after the jobs number came in lower than expected, signaling a possibly cooler economy. Add it all up, and that's 54 basis points or a half of a percentage point in just 1 week, and that rarely ever happens. Now, to put it in perspective, if you're buying a $400,000 home with 20% down on a 30-year fix, your monthly payment is $119 lower today than it was just last Monday. All right, so what does that mean for the fall housing market? Well, it may help on the edges, maybe, but it's certainly not going to get the market moving again. And why? Because sky-high home prices. The last time affordability was this bad was in the 1980s when rates were in the double digits and the average home cost about 3.5 times the median income. Well, today, the average home costs 6 times the median income. And annual home price growth accelerated to 4.3% in September. That according to ICE Mortgage Technology. Now, that said, Redfin reported nearly 7% of for-sale homes posted a price drop during the 4 weeks ending October 29th. So we'll see if we don't get some relief, at least on the prices going forward. Back to you guys.
All right, finally, that's what we say. Thank you, Diana. Diana Oleg. One more thing before we go, and that is F1. Yesterday's Brazil Grand Prix wrapped up with a dramatic race that saw only 14 of the 20 drivers finish. Next up on the circuit, Las Vegas. We're less than 2 weeks away from the city's debut race. We are going to dive so deep into this, Carl, because we've got a new CNBC documentary, Inside Track, The Business of Formula One, that premieres on CNBC Thursday, November 16th at 8 p.m. Eastern and Pacific. That's just ahead of the Las Vegas Grand Prix, and I'm sure you were watching Brazil this weekend.
Oh my gosh, of course, yes.
Right.
Amazing.
So what happened is Max Verstappen won. He's won a record 17 races this season, and he's completely dominated for Red Bull. And we dive into this question of whether that's good or bad for the sport to have the same guy and the same team winning every single race.
Wow.
Now, the battle for 2 and 3 were exciting, but that is one of the criticisms right now, and it's a big business story.
I have a feeling I'm going to learn a lot more in the coming days.
Yes.
We can't wait.
Thursday.
Squawk on the Street continues after this. Don't go away.
It's non-stop. Let's take a look at the 4-hour. Still super overbought, so all right, less than a minute left before 11. So again, ladies and gentlemen, pleasure, good morning. Nice quick 10, well, it wasn't quick, but nice 11 points on ES short this morning, or US 500, or SPX, or SPX cash if you're trading it on the Forex side. I'll be seeing you guys tomorrow. If you're profitable, don't overtrade. Don't go back in. Like, this is just consolidating. This is just nasty and slow, watching paint dry, and I no longer want to partake in this, so I'll check this back at 3 p.m. see what it is. I do have alerts set where if it breaks below, I'll look to potentially re-enter, but as of now, I am good. Don't want to be caught up in this, so y'all have a good remainder of the rest of your day. Don't overtrade, and I'll see you guys tomorrow. However big or small profits you made today, keep it, lock it, because it's still looking right now. It's looking like we could still potentially spike to take out Friday's high and then start making lower highs. So now what we want is we want confirmation. If we don't see confirmation, and if it literally continues doing this sideways action all day, like, go do something else. Like, I'm gonna do some other stuff. So I'll see you guys tomorrow. Peace.